All right, ladies and gentlemen, MrSotko here. Welcome back to the channel. And oh man, what happened last night? We were at $61,000 Bitcoin and we crashed to $51,000 Bitcoin. It shows it here at 53,000, but on my Coinbase app on various exchanges, it went down to 51,000. So we lost $10,000 on the price of Bitcoin in a flash crash. So what was the cause? Well, it was probably a lot of things, but first and foremost, how accidents in Chinese coal mines are affecting Bitcoin. So this is sort of the prelude, and I'll get to the reasoning, the aftermath of this, if you will. So disruptions in coal mines in Xinjiang and other parts of China have knocked out Bitcoin miners in the region, clipping as much as 35 exahashes from the Bitcoin system's global hash rate. Figures shared with CoinDesk show F2Pool, Antpool, BTC.com, and Poolin. The four largest pools in the world have collectively lost 86% of their share of Bitcoin's global hash rate over the past 24 hours. So basically, there's been some coal shutdowns in China because there's some various accidents and explosions, unfortunately, and with that said, we move on to the next article. Bitcoin mining pool hash rates plummet following Northwest China blackouts. So the hash rate of Bitcoin mining pools have plummeted once again over the last 24 hours. In a tweet earlier today, a Chinese journalist goes by the handle Wu Blockchain attributed the Bitcoin hash rate declines to a blackout in Northwest China. The blackout was reported put in place for safety inspection. So basically, China was shutting off their own power to safely inspect their coal power plants. Wu Blockchain, who reports exclusive crypto news on their website China Crypto News, revealed drops in multiple pools. Ant pool fell by 24.5% in the last 24 hours. BTC.com by just under 19%. Binance by 20%. And Poolin by a considerable 30%. The Chinese media outlet WuTalk offered further details on the blackout. Reports indicate the power outages in the Xinjiang region and the subsequent safety checks may have a certain impact on related industries in the short term. Will they? Xinjiang has been the site of recent floods, and one such incident in the region trapped 21 coal miners on April 10th. The miners have since been recovered. However, the flood caused power outages throughout the region. And I remember a lot of pictures over the past few years of floods in China, and basically ASIC miners just spewed all through the mud. And so whenever those floods come along, a lot of these warehouses filled with ASICs are in the flood zones. But moving on from that, 7.6 billion in crypto long positions were liquidated in 1 hour as Bitcoin plunges to 52,000. Although again, on some exchanges, it was actually less than 52,000. So when the price goes down so quickly like that, well, a lot of longs are liquidated. And when longs are liquidated, even more are liquidated and more in a cascading effect. So basically, these shutdowns spooked a bunch of miners because, well, first of all, a lot of miners went offline. And then a lot of people consider the hash rate and the price of Bitcoin correlated with each other. And so that caused a whole bunch of people to sell. And there was a whole bunch of longs. I mean, this is one of the biggest liquidations I think I've ever seen in the crypto world. At least it's up there in the top 10 at the very least. 7.6 billion in crypto long positions have been liquidated over the past hour as Bitcoin's price plunged to 52,000. So a whole bunch of wrecked people. This is why don't margin trade, because you never know when all of a sudden the power is just going to go out in China and the hash rate of BTC is going to drop by like 50% for a very short period of time. Who knows, right? And then you just lose all your money. Whoops. Bitcoin's price began to trend downwards early Saturday, but the steep plunge began around 3 UTC on Sunday. I actually saw this. I was just online with a friend last night, and he said the markets don't seem to be doing so good. He's actually new to crypto, and I took a look at CoinMarketCap or my app or something like that, and Big TC was just going along, and as all of a sudden a straight downward line. I was like, oh my God. And I thought to myself at first, well, maybe it's futures expirations, right? But I didn't realize that it was actually like a $10,000 decrease at the time. And I thought to myself, well, it is getting close to that last Friday of the month, even though it's a little bit early for that. Usually it's around the 20th or the 23rd of the month when it starts to dip because of futures expiration. So I said to him, it's a little bit early, but maybe it was. And then I sort of looked into it and I was like, yeah, I guess it was margin traders who probably absolutely got wrecked. Looking into it a little bit more, apparently China had shut down a whole bunch of power in various regions where there's a lot of ASICs, which spooked a lot of traders. They start selling. And because there's a ton of people with unbelievable leverage in the world, BitMEX has 100x, I think Binance has 150x. We'll get into that in a second. And there you have it. As it cascades down, it wrecks other people. It sells your Bitcoin for Tether, yada, yada. So Bitcoin's price plunged by more than 10% over the past hour from 58,000 to below 52,000, during which around 4.3 billion in Bitcoin long positions were liquidated. As the time of writing, Bitcoin's price has bounced back to 55,000 because it did bounce back pretty quickly, but still hasn't quite recovered. Overall, 9.2 billion in crypto long positions have been liquidated in the last 24 hours. So I think the 7.6 billion is just Bitcoin, but 9.2 billion total for all crypto. That's what I'm getting at from this. An explanation on Reddit, which, again, Reddit's just a post from a random person, but it does make a lot of sense. Degenerates on Binance with up to 150x leveraging, borrowing Tether to buy crypto, have been building up their margin account balances to big numbers. And when they make money, they double down and build even bigger positions because they're degenerates. Not my words. But when the price dips below a certain point, some degenerates who have these margin accounts are suddenly below their maintenance limits and they get liquidated. When they get liquidated, Binance will sell your crypto for Tether and you are left with little to nothing. So what happened? Crypto got sold and Tether got bought. Because crypto got sold, the price drops, which triggers even more accounts who thought they were safe to dip below their margin account requirements. This creates a feedback cycle which basically ends in the liquidation of all margin accounts. It all ends in a very fast cascading crash like we just saw. The bad news is the price is lower, but there's a silver lining. The good news is that the market is in a healthier position after this. Most of the unsustainable degenerate margin accounts are probably gone. And if we go back up to 60K in the next week, it's not because of borrowing as much. Going forward, at least for the near term, another event like this is not very likely because everybody got wrecked. And I agree with that. It's probably good. We were trying to get to 62, 63,000. We had $2,500 ETH and things started slowing down. And the way I see that the cycles typically work is that, well, let's say Bitcoin's at 10,000 and you have all these investors coming in and they think to themselves, okay, everybody's saying Bitcoin's going to be 50,000. Everybody's saying that it's going to be 100,000. That's 5 or 10x. That's good enough for me. So people buy Bitcoin. It gets up to 60,000. It starts to slow down. And when you think to yourself, okay, I want to make good gains. I want to make a lot of money. Right? Is Bitcoin a good option? And sure, it is for the long term, but of course, everybody in crypto is always thinking, oh, I want my 10x gains, I want my 100x gains. And if you think to yourself, okay, Bitcoin has to go from 1 trillion to 2 trillion, because so from $60,000 to $120,000 is a big movement. That's 2x, but that's a lot of money. That's $1 trillion. So people start putting all their money into altcoin accounts, etc., alts and whatnot to try and get even more money. And then when those start to slow down, then there starts to be some kind of crash because there's just not enough money. People start selling that, and when they start selling that, it brings Bitcoin down, and Bitcoin's still not a good idea. So basically, 100x leverage probably caused this crash. And then looking at another tweet here that was considered to be maybe a catalyst of this was that the U.S. Treasury to charge several financial institutions for money laundering using cryptos. Security lawyers familiar with the Yellen task force plan said. So there's no real proof of this because you can't find this on Google. And some people said that the financial institutions mentioned in the headline, are we talking mom and pop financial brokerage or something akin to Coinbase? And somebody says source, this is what happened. This is what popped the 2017 bubble. And some people are saying that they could nothing on Google, would love to see some verification. And so one person said, wrong, cash settled CME futures popped the bubble. Government greenlighted them to do exactly that. Here's the source before you try to argue it somehow. Now, this was in 2017 for the crash of 2017. So this is, I suppose, a little bonus article I'm gonna talk about here. And this is my reasoning among many for the reason that Bitcoin crashed from 20,000 to like $3,000 eventually within a year in December 2017. And my reason was what CME futures was the biggest reason for the crash of Bitcoin, because CME futures came out on like December 17th and Bitcoin crashed on December 17th and 18th of 2017. You could also argue, oh, there was a lot of ICOs selling. BitConnect was starting to get called out to be a Ponzi scheme, and it crashed something like a month later, et cetera, et cetera. And so there was a ton of reasons for the crash of 2017, but my argument for the biggest one was CME futures coming out, because literally the same day that it came out was when Bitcoin crashed. I also showed in videos in the past years that every time a new asset comes out from CME, silver crashed, gold crashed, I think it was uranium futures crashed immediately, literally the day that CME futures picked up those commodities and those assets. And when they picked up Bitcoin, it crashed the same exact day. Because people holding on to Bitcoin, then they can make cash bets on Bitcoin going down, because obviously we're at this all-time high, so it's likely it's going to go down from here. And then all they had to do is sell their Bitcoin, start crashing the price of Bitcoin, and then they get money for their cash-settled futures from CME. And here we go. The Trump administration popped 2017 Bitcoin bubble. San Francisco, the Trump administration acted to, now this is an article from 2019, but the Trump administration acted to deflate the Bitcoin bubble in 2017 by allowing the introduction of futures products, a former official said Monday. Christopher Giancarlo, who left the U.S. Commodity Futures Trading Commission at the end of his 5-year term as chairman in April, told CoinDesk in an interview, one of the untold stories of the past few years is that the CFTC, the Treasury, the SEC, and the National Economic Council director at the time believed that the launch of Bitcoin futures would have the impact of popping the Bitcoin bubble, and it worked. And it definitely worked. It came out the same day. Hey, you do the research as well. Check the day that Bitcoin crashed in December 2017. Check the day that CME futures came out for Bitcoin. It's the same day. In a speech in the Pantera Summit in San Francisco on Monday, Giancarlo elaborated further, saying Bitcoin's dramatic price run-up in December 2017 was the first major bubble following the 2008 financial crisis. That's why the Trump administration acted in concert to address it in a pro-markets manner. Bitcoin futures listed by the Chicago Mercantile Exchange and the CBO Futures Exchange were announced by the CFTC on December 1st, 2017, and it went live on December 18th. Okay, so it was 18th. Bitcoin's price peaked at $20,000 one day earlier on December 17th before falling dramatically in subsequent weeks. In fact, we can go to that. Well, let's take the time to do that right now. We'll go to the all-time high here, and we'll pull it into December 2017 on that big run-up. And you can see December 17th was the high, and Bitcoin futures comes out on the 18th, which I guess I can't even get it close enough, literally, to just look at the 18th. But you can see here the 17th is the high right here, and then the next day is the 18th, and that's exactly when it starts going down. So people can basically bet for cash futures on CME. So it's basically just a horse race bet. Oh, Bitcoin's going to go up, Bitcoin's going to go down, and then you get money. So you put money in, you get money in. It's basically just like a casino bet. There is no Bitcoin with CME futures. So it is likely that you had a bunch of institutions betting against it and then selling their Bitcoin, and it's a whole bunch of people. It could have been just institutions, but just a whole bunch of people in general that use CME futures, and it popped the price. And again, I made a video a few years ago. It showed gold, it showed silver, uranium. The very first day that it was listed on CME, instantly downwards. So instantly using it to bet against the price. So that's likely the reason Bitcoin crashed last night. The shutdown of China's power supply, shutting down a whole bunch of hash rate. Hash rate goes down, people get scared, people start to sell, and the 150x leverage, 100x leverage on these platforms, which is absolutely ridiculous. I mean, at that point, I read somebody says you might as well just have 1000x leverage. If you're going to use 150x leverage, you might as well just use 1000x leverage. If you're going to go down, may as well have a shot at the good life or be under the bridge. Exactly. I mean, you might as well just lose all of your money, or you might as well just gain unbelievable amounts of money, because it's the same way with 150x as it would be 1000x in that sense. You might as well just lose all your money, or you might as well just gain all the money in the world. At that point, it's such a ridiculous amount of leverage that it's insane. But Bitcoin at 55,900, so starting to climb back up a little bit. Ethereum still at 2,100, didn't really recover from its crash so much. So the market's still way down from that. A lot of people still not understanding what happened. But that's all I have for you guys. Make sure you like, subscribe, share the video. My social media in the description below. But as usual, hope you guys enjoyed it. I'll see you next time.